Welcome to Momentum Monday. Howard?
Yes, sir. I am. Welcome, everybody. I'm in Toronto, in New York this week. Toronto right now. You can see me. It's a little gloomy. I don't even have the windows up. It's East Coast time, and Ivan, you're still in Bulgaria?
Yes, I'm still in Bulgaria for about 10 more days. But I'm coming back, I promise.
Yeah. Doesn't matter to me, dude. The wall will be built. Okay.
Okay.
So just bring a ladder. Or you're probably not coming via Mexico.
No, via airplane. So sorry.
Do you think Trump knows that there's a border in Canada that's pretty big too?
I don't know. You have to ask him on Twitter, I guess.
You don't worry about these things. Only I do.
Yeah, I guess I'm not too worried as of right now.
All right. We are going to get right to it. Ivan and I are doing the show early Monday. So the market is just opening. Markets are actually gapping down. So just because I'm on the road, we wanted to bang this out early Monday. So, but I think this should be a really interesting week. The president's he's literally telling people I'm locked in the White House. I have no idea what it means. It's just really bizarre. We've really tilted into a bizarre political mode. I know it's funny at some level, but it's also just so weird. And it comes at a time when the markets have had just expected oversold rally, Ivan. And I think it's just going to be one hell. I'm just doing nothing. Obviously I'm very light. We'll get into where you're at with your kind of swing trading stuff. But I wanted to talk about open source today, Ivan, if you can remind me in a couple stocks, and about being really patient this week too, because of all the resistance technically that we're looking at. We'll start with, a lot of people don't know we're not actively promoting this because we're not looking for thousands of subscribers, but we launched a product together. Ivan and I kind of am bringing back Peloton. Take us to the homepage there, Ivan. You can see our ugly mugs right there. We've teamed up to kind of, on Market Wisdom, redesigned it, and I'm going to bring back Peloton. I'm going to focus on helping people build a portfolio of 12 to 15 companies a year. Doesn't mean you shouldn't be dollar cost averaging and owning ETFs, etc. But Ivan and I are really trying to build a mentoring service for people that like active investing, and truly like active investing, truly want to try things on their own, truly want the support of a community around momentum and trend investing. So I'm offering, a lot of people on Peloton bought lifetime memberships or feel like they paid for a year. We did it for a year. So I'm offering a great discount. Just email me or hit me up on social, and we'll make sure we take care of you for those people moving over from Peloton. There'll be some extra videos that Ivan and I do near weekends, just about strategies and where we feel we're at, and with some special guests. Other than that, it's business as usual for Ivan and I. So Ivan, where do you see the markets right here?
Last week we talked about, and even the past couple of weeks we talked about it. The S&P is most likely is going to trade in a new range around 230 to 260, and then we saw that 2-week rally that it's kind of fizzling right around 260, and today after we saw some pretty poor numbers from China, we're seeing a gap down of around almost 1 percentage point. So nothing new. I think everyone expected that the indices will fizzle around here. Well, the 260 was a support for a long time, for around 7 weeks, and now it's resistance. And it'll be really interesting here if we just make a lower high and then break above it, or it will just become another range-bound action between 230 and 260.
Yeah, that was I mean, I literally have no feel. I mean, just technically, just textbook place to just scare the bejesus out of people here. But again, fundamentally, there's been so much damage, and valuation wise, things aren't crazy. There's pockets of craziness still, but there really isn't. You know, it just feels like weirdness in the markets, not so much that there should be chaos.
Yeah,
Confined to policy fighting, not and the government, which is, you know, a wild card, but not so much financially and fundamentally. What do you think?
well, earnings season starts today, kind of officially, and that's why I pulled up Citigroup, which was the first big bank to report today, and they beat the earnings estimates. They were a little low on sales, and so far the market is reacting positively. I mean, at least they're not down 5%. So market reaction is what matters. So yeah. And it reflects the real market sentiment. So this will actually tell us where the indices are going next, because the indices are lagging indicators.
Yes.
So that's why we need to pay attention to stocks, because some of them will tell us where the indices will go. And if we see more and more positive surprises and positive market reactions to so-so numbers, then the S&P will just break above that 260. If not, we'll just have another like lower. And even Lululemon, which has so much competition from left and right in the high end and in the middle, they just came out today and said they guided above estimates. They pre-announced better than expected earnings, and they also said that their same-store sales are in the high teens, which is incredible considering how expensive their stuff is. And look at them; they're just showing.
Well, I'm trying to sell to everybody. I think what people always I'm looking to re-enter Lulu when it's one of my 8 to 80 brands. As the market was stopping me out, I got stopped out of Lulu as well. And it's looking to kind of bottom and drag me back. And I think where Lulu's advantage is, if and when we turn, and obviously Lulu is saying they're not feeling the effects of this, is they're selling to an audience that they sell to. Their audience is growing. They're focused on males. 6 years ago, there wasn't a male that, other than that, crazy 1% male that was in perfect shape to wear their clothes. Now it's for pear shape. I call it like the Facebook of ladies' behinds, but it's really become a guy's leisure wear as well. So I do some yoga. I don't do it intensely, but I like the casualness of their stuff. It doesn't make me feel like I'm sloppy. But I think what they've nailed, like Apple has nailed for technology, is Lulu's nailed the ability to change. You go into their stores every month, and there will be new stuff, which is what's hard for the other massive retailers that are appealing, to the seasons. Lulu's not appealing to seasons as much as they are to just consistently updated fashion. Same with Nike. Doesn't have to deal with seasons as much as it does with, and again, it's much bigger than law of large numbers for Nike, and much more complex systems. Leisure is kind of, was breaking down, but holding in there. And
Nike just released a new yoga clothing line. And I saw that their prices are around 30% cheaper than Lulu, but it doesn't seem that they'll make a dent.
They may not make a dent, but they're going to grow the shit out of that line. It just improves as more people move to leisure. Nike has to get in there either way. To compete with Lulu, they just have to create. Lulu has its own brand, and as long as Lulu continues to be Lulu, and they can tap Asia, it's just one of those 8 to 80 brands. There's just 8-year-old kids that want to wear this, and we're talking about the 5%ers or the 10%ers or the 1%ers, are still huge. That market's insatiable and can continue to spend money monthly. What else? And we were talking about banks a minute ago. Let's pull up XLF, because we can, even if we get through earnings here, let's go to a weekly. Even if we rally on financial news, you can just see here we're back below, right at 2016 where everything was breaking out, and now we're kind of back below, or in that, we're at a really critical juncture. I'm not saying that we can't just stay here base and move on to all-time highs. It's just I'm not expecting anything exciting to the upside as we kind of chew through this, and as we still have, debates about where rates are going. So I don't think the financials right now are the place that are going to lead us. It'd be great if they did, because that would be great for growth stocks. But I think you have to just look at financials and go, other than the U.S. financials, the rest of the world look like shit. And are the U.S. is going to fall into that rest of the world trap, or lead the European and global financials out of it? I just don't know. And the tech companies just don't need banks other than deposit their endless cash, right? So it just looks like we'll just have to wait and see on banks. You want to get to, all right, there's the NASDAQ. You want to walk us through the NASDAQ, and then let's go through the Momentum 50 list, Ivan, and then I want to end with some open source stuff.
Yeah, I mean, as you mentioned, with the S&P 500, the picture here is similar. We mentioned a couple of weeks ago that most likely the NASDAQ will, 160 was support. Right now it's acting as resistance, and let's see if it makes a higher low and then attempts to break out. And earlier we mentioned that it's really important to pay attention to individual stocks, especially to momentum stocks, because they tend to be leading indicators. And then on Friday, we started to notice how the strongest sector for the past year is starting to have some failed breakouts. We had a couple of failed breakouts in enterprise software stocks like Okta, and I think the other one was
Mongo.
Mongo.
Also. Let me see Okta. Let me see Okta quickly. And that's okay. The market may just be. So Okta, it's just reversed and it's down today. Okay, it's trying though, trying. But
failed breakouts in momentum stocks are a major leading indicator, and that's what I wrote in my weekly review this week. And I said just keep an eye on that. I mean, the indices are lagging indicators. We should not be basing our strategy on the price action there. And I mean, for the next few weeks, it will be really interesting to see how the markets will react to the new earnings reports.
Yeah, I am really waiting to see how we look next week. But I was all prepared to try a few longs, and I'll give you a couple names that I'm looking at. But like this, so Mongo's interesting. I'll get into that to end it. But let me look at Team. Sorry, here, Ivan. Just pull up Team for a minute. So these all held up the best. Yeah, and it's just forming. Yeah, I mean they're high level basis. So Okta, Mongo, Team. These are the ones that should leak. Now, there have been some breakouts. So if we look at some biotechs, if we look at the one that I'm looking at, XS is just a high loose base. But this company is so interesting to me because it's digested a massive gain over the last year and a half, 2 years. And just seems like a really interesting company. VNDA. ARY is a little more conservative of biotech with real big business that I'm watching base in the $17.
Which one? ARY?
ARRY, Array.
Yeah, very interesting.
Just a really long base here. But again, 95 relative strength, losing less and less money each year. Not a sexier, but again, in the cancer treatment area, and I've heard great things from doctors that I talk to. When I talk to doctors, I talk about, because a lot of doctors have heard of Array products and treating cancer. So if we look at a weekly on this one, it's just buying its time. Sneaking hasn't, digested huge gains from 2016, and so there is some areas that are looking to break out. It's not like it used to be in terms of hundreds of companies. Chegg is kind of like my Etsy of CHGG. This is kind of like a Netflix / Etsy of University for Textbooks. So I've been doing some work here. Obviously, it's had a great run, but that doesn't mean, the run is over. And, you can see it just battling the markets here and just withstanding everything the markets have to throw at it. Same with Etsy, same with Twilio. So around the fringes, and we talked about Lulu and Nike, some of these great names are hanging in there. And Shopify. So there are names that have just eaten through some of this really big market selling. Doesn't mean they can't roll over and get ugly, and that's why we just have to follow the markets a little bit too. And but right now for me, Ivan, you may be different. The markets are keeping me quiet. We're just, we've got flat to downward moving averages. We've got earnings season. So I'm just going to wait for more evidence before I have to pile back into the market. And in the private markets, I think the big concern, and you have to think about the early stage markets where I'm seeing fantastic deal flow, fantastic founders. But I think the biggest news around early stage market and the private markets that I invest in, that I worry about, and I'm talking to a bunch of venture capitalists about this, is the data shows that it's all this money flowing into the big companies. And what happens there is, even though I can find great founders to back at great valuations, if they can't raise their next round, it's all for naught. So we need a healthy pipeline. We can't just have early seed stage working and late stage momentum public stocks working. I can't fund companies at the early stage, neither can the best VCs, if they're not going to be able to get funding in 6 months. So it's not as simple as like it seems out there. For a while, it's just been working everywhere. And now we see that, things are breaking down in the system, whether it's, A rounds or momentum stocks not working or European banks. So I still think, we're in a shoot first and keep the gun in your holster. But at the same time, I'm prepared to wade back in here if the markets firm up. Okay, momentum list, Ivan.
Well, let me see. I need to log in again. So let's try this.
Is your girlfriend still with you?
Oh no, she's back in San Diego. I think she's visiting Phoenix for work this in a couple of days, actually.
How'd the whole thing go with your family and her?
Good. So are you seeing my
No, I'm just seeing the S&P chart.
Okay, I need to switch then. Okay, 1 second. All right, let's see. 1 second. All right. Howard?
Yep.
Okay, so this is the momentum the current Momentum 50 list, as we can see.
So it's still all, from Splunk to Workday. You got Vanda in there, which is pharmaceutical, AYX. We're not going to walk through the whole list because that's for subscribers. You've got Ionis, so that's a new biotech in there. What's new? We've got Ameresco Technical Services. We've got, so nothing new other than Ameresco. Twilio's been there 37 weeks. HubSpot, not much has changed.
Yeah.
Yeah, Crocs is there. I still not buying into it, but it's had a great run. And that brand to me just means rubber and stinky shoes. But utility-wise, they've got a new line of shoes, and people seem to be buying the shit out of them. What's been on there the longest? Let's see. Twilio, Amazon, 62 weeks. Wow. Yeah. So again, this is where they show up. So down at the bottom, Horizon Pharma, Quinn Street looks really interesting. It's another one and CyberArk look really interesting. Just in the so there's still a lot of stocks, Ivan. Like in a really bad market, we wouldn't have this many names on the list.
Well, the market is definitely not as bad as it was on Wednesday. So
yeah, so anyways, it's actually even a little more diversified, from Planet Fitness to biotech to restaurants creeping in. McDonald's in there. I'm long McDonald's, but you're gonna have to get used to some of these new names. It's I see CN in there. Wow. So anyways, if you remember, I've been walking through what they get, because I'm offering just helping people build a portfolio and maybe a video or two extra a week. Walk them through what Market Wisdom, what you provide and what they get.
Market Wisdom has three major sections. We have the Momentum 50 list, which is a list of 50 current market leaders that are close to breaking out, and it's usually a great starting point for many members who just want to pick stocks and trade on their own. We also have the Howard's portfolio. He has one big idea a month, and then he's also building a portfolio of 10 to 12 stocks a year.
Yeah, it's an aggressive portfolio. Listen, we're trying to trounce the market. And it may be names that you've heard of, but generally they're going to be names that, we're not looking to just track the S&P. I'm looking, we'll take fast losses, but at the same time, I'm looking, if we're going to pick stocks, I'm looking for stocks. And we had a great run at Peloton with Etsy and Twilio, which were still long, and Zendesk. And it took some time off because that market was just overheated. I wanted to bring back something in a pure style that I can control completely, less marketing, more style. And so, what I'm trying to bring, Ivan, is just stuff that I do that I don't have to check every day. We'll have volatility, but ideas and trends that could, mega trends that could persist, like the Lulus, like Fashology, like I talk about. But it won't just be winners, unfortunately, but we will build a model portfolio together.
Yep. And then in addition to that, we also get my swing trade ideas, and my daily market timing analysis. In swing trades, they usually last anywhere between 2-3 days to 3 weeks. So they're shorter term ideas for people who want to be more active in the stock market.
Yeah. And nothing is bulletproof. So it's interesting, Ivan. We'll end it with this. I was talking about open source. I'm trying to understand open source software. So if we go, I did a blog post a couple days ago, and everybody should really read it. If you're already a geek, it won't mean much to you. But Mike Volpe, kind of legend in venture capital and software, ran corp dev at Cisco, built Index Ventures, one of the great new funds of our generation. Massive returns. They're investors in Robinhood, for example, with me, but really hardcore software guys. And Mike Volpe, there's the article this weekend, open source software, an undeniable megatrend. Sure enough, this is the way everything works. I read this article and everything kind of made sense to me. He's written some articles that linked there 4 years ago. And I'm like, Jesus, God, why can't I be that smart? And then, pull up a chart of Mongo, Ivan, now. and see that last week, what seemed like an unstoppable megatrend, we learn as in technology, everything, especially in this world of planetary large companies, that Amazon threw some water on the megatrend by saying they're going to build on top of Mongo, which which Mongo looked unstoppable a week ago, sent the stock down probably now like 20%. What looked like a stock that was going to head back to all-time highs very quickly.
Are you making popcorn, or what's that noise?
No, can you hear? And it's the heat because it's so cold here.
Oh, okay.
What about now?
Yeah, right now I'm sharing the Mongo chart.
Yeah, so we can see that it could be the market, just be market doing its thing, and maybe this announcement by Amazon. I'll write about it here this week because Ben Thompson was just writing about trying to explain how Amazon is going to muck up the open source business model. So as usually in the markets, there's no sure things, and you're constantly got to readjust. Even what looks like, was one of the strongest stocks in the market, boom, Amazon just threw a 20% wrench in the company. So you always got to be prepared for this stuff. And sorry, hang on one sec. So that's where I want to end it in. It's like we're constantly, reading and in megatrends. Well, I'm not technically trading. You've got to constantly stay on top of, the news, even though you're not day trading, of how companies are perceiving this.
All right, then let's end it on this note, and then we'll see you next Monday.
Okay, buddy.